Rise News' Kelsey Minor is here in the studio with more on that. Kelsey.
Well, Wendy, the company recalled nearly 30 million automobiles alone this year, but even that wasn't enough to lose the trust of some consumers. GM outselling other companies in North America and China. In fact, the auto giant is raising prices. American consumers kept flocking to GM showrooms despite the recalls related to those deadly ignition switches, helping boost quarterly revenue. GM was able to charge more for new vehicles. Strong sales of Chevy trucks helped grow its margin and drive its North American earnings up 12%. And Buicks and Woolings helped expand its market share in China. However, profit falling 14% from the prior year because GM had to take charges for the August flooding of its tech center in Detroit and the downturn amid the political turmoil in Russia, where it's cutting its production and losing money in the Europe and South American market. Still, the profit GM did make ended up beating analyst expectations. CLSA senior analyst Emmanuel Rosner said GM North America's margin continued to benefit the company's new products, while international results were not as bad as many investors feared and should see improvements from restructuring actions. GM stock rose in early trading. The stock has lost nearly a fourth of its value this year, lagging far behind Ford and Fiat Chrysler. And back to those recalls, the company's chief executive, Mary Barra, says GM is working with suppliers to rush shipments of parts involved in the recall. Meantime, company rival Ford Motor Company, Wendy, waiting until tomorrow to release its earnings report.
All right, well, maybe all of this will start to raise the stock price. We'll see. Thanks, Kelsey.